Let me know if you fall in this category. Please leave a comment below because I just didn't believe it. I recently read an article that said, it's from Yahoo Finance, that said a staggering amount of Americans said it would be okay if we went into recession if that meant they could buy a home. Actually, it said 64% of Americans said they are ready for a recession if that meant they could buy a home. In this video, we're going to touch on just that. What a recession and a fear of recession means for the housing market and how it impacts both buyers and sellers. You don't want to miss this because I believe we as a country, the United States, are headed into a recession later this year, if not early 2024. So this is information you need to know so you know how to plan and prepare and navigate moving forward. Let's dive into it. Before we get into this video, let me introduce myself. I am Sir Ashley. I'm a licensed real estate professional in North and South Carolina. And on this channel, we talk about personal finance, real estate, and the Charlotte area. Now let's jump into our talk about recessions and what that means for you home buyers and home sellers, and not just recessions, what the fear of recessions can do to a market. Let's go. Now, recessions do have an impact on the housing market, but it may not be what you think. Just because there's a recession doesn't mean home prices or home values will go down. Actually, in the early 90s, when there's a recession, home prices remained pretty constant. However, in the Great Recession during 2008, home prices did take a dramatic fall. But during two recessions in the 80s, they saw home prices actually go up during those recessionary periods. But now let's talk about what a recession means for the housing market in general. Historically, recessions have led to a slowdown in the real estate market. Now, a slowdown is different from a price decline. Two different things. In the past year, we haven't gone through a recession, but in the past year, we've seen where the real estate market has slowed down. The high interest rates has caused less buyers to come to the market and has drastically slowed down the pace in which real estate has been going. But home prices are going up month over month. So recessions do lead to a housing market slowdown with fewer people buying and selling homes. Now, the slower real estate market can result in lower home prices and increased inventory, making it a buyer's market. However, it's essential to remember that every recession is different. You see, this time is different than 2008 because in 2008, people had these adjustable rate mortgages and they saw that, okay, this hit. So that means my mortgage is going from $1,500 a month all the way up to $2,500 a month. Why would I do that when I can go rent a home right next door and it'd be significantly cheaper than my mortgage payment? Right now, that is not the case. You don't have tons of rentals available. You don't have tons of vacancies. So just because it may be difficult for somebody to make their mortgage payment, they may not be as willing to give their house to the bank or just go ahead and miss mortgage payments and lose their house to foreclosure because of the monthly payment. They know that their mortgage payment they're making now, which they may be having trouble making, is still significantly cheaper than what they would have to pay if they rented a similar sized home. So every recession is different and every housing market is different. Right now, there is just little inventory on the market, making it a seller's market. Now, the second point I want to make is actually what I believe is the most important thing to look out for right now during this recessionary period or this fear of recession. Let's talk about how the fear of recession can impact home buyers and home sellers. You see, when people are worried about a potential recession, they may be more hesitant to make significant financial decisions, such as buying a home. This can lead to a slowdown in the market as buyers wait for more favorable conditions. So if you are a home buyer, it is very critical that you assess your financial situation and consider whether it's a right time for you to buy a home. However, as Warren Buffett once said, when there is blood in the streets, buy. I didn't quote him exactly, but the sentiment is clear. When everybody is fearful, that is when you want to capitalize because that means pricing has come down. So when everybody's fearful and not acting, You want to pivot and act so you can put yourself in the best position possible and act when everybody else is scared. And that takes me to point number 3, how the fear of recession can impact home sellers. You see, the fear of recession just doesn't impact home buyers. It has an equal, if not greater, impact on home sellers. You see, with fewer buyers on the market, sellers need to adjust their expectations and be more flexible in their asking price and what they think they should get for their home. You see, during the last recession, I was able to capitalize on sellers' low expectations and buy properties, actually take over mortgages, simply because there weren't any other buyers on the market. This is why I said in point number 2, act when others are fearful, because you can come across some excellent deals. Fears of recession causes sellers to kind of panic, because if you need to sell or need to not make this mortgage payment in order to move on with your life, you're just looking for a solution. And if you, as a home buyer, are able to provide that solution for that seller, it is a win-win opportunity. So regardless if home prices fall during a recession, you can use the fear of recession to your benefit. So we talked about what recessions have done in the past to home prices. We talked about the fear of recession for both buyers and sellers. Now I want to talk about how you can prepare for a potential recession. As a home buyer, you want to make sure you have stable income and have a healthy emergency fund. You want to be able to withstand anything that comes up. You want to have a fund of money available to take care of your lifestyle, all of your living expenses for at least 6 months, and maintain a good to great credit score. As a seller, you want to ensure that your home is in excellent condition and priced competitively to attract buyers. Now remember, as a seller, everything can be rectified with price. If you don't want to lower your price to a crazy low number, your home has to be in excellent condition and has to stand out against the competition. Now, if there's not a lot of competition, as there's not a lot of inventory in the market right now, you may not have to do quite as much. But even in today's market, sellers are seeing that even though there's not a lot of competition, other homes for sale, in order for your home to fly off the market, it has to have an attractive feature, if not features. Now, that attractive feature may be a very low price, something below the median. But if you have a home that is over the median sale price in the area, your home has to stand out so you can attract the attention of the limited amount of buyers in the market right now. So working with a knowledgeable real estate professional can make all the difference when navigating a market during uncertain times. Please be sure to like this video and subscribe to the page and hit that bell icon, because you do not want to miss my next video. I'm going to be talking about credit and how it is impacted during recessionary periods, because just because home prices came down, just because mortgage rates came down, doesn't mean that you're going to be able to get qualified to buy a home. The credit standards for a non-recessionary period and a recessionary period are 2 different things. I would hate for you to be waiting for prices to come down, for mortgage rates, interest rates to come down, and then you not be able to take advantage of it because your credit isn't where it needs to be. I'm Sir Ashley. I'll catch you on that next video. Talk soon.